Hello everyone, welcome back to the Money Mentor podcast where data meets drama and Dr. Andrew Wilson keeps us all grounded in what's actually happening there in the property market. And this week, Doc has brought the fire again. We're talking inflation, electricity bills doing some heavy lifting, latest land prices, always interesting, and auction markets holding their nerve through the spring chaos. Let's unpack it, Doc.
Yes, Rachel, good day and hello everyone. Again, here we are, pushing up towards 150 episodes now, so that's all good. Some interesting news this week, of course, interesting times in the property market. We're all coming up to the race that stops the nation, I think they call it, the Melbourne Cup. And in Melbourne, of course, they have a public holiday on that day. So it's everybody will be taking Friday off as well as Monday and getting the Tuesday. So it's holiday mode for Melburnians. Those that are interested in the Cup, well, whatever, it's still a holiday if you're not. But what it means, of course, is it's a little bit up and down our auction markets at the moment because people are distracted, particularly in Melbourne, with the holiday coming up. And also some of the other states, the capital cities also have that distraction. But what it meant was last week was a very big week for auctions, particularly in Melbourne. Just under the record for a week of auctions in Melbourne, and some interesting results to take note of there, Rachel, because tons and tons of options there for buyers in the Melbourne market and other markets as well. But of course, we've already spoken about the Melbourne Cup. That isn't the big event next Tuesday. Well, for economists and perhaps financial journalists, the big event is the RBA meeting, the traditional Melbourne Cup meeting of the Reserve Bank of Australia. And that's usually moving day, Rachel, that Tuesday. The Reserve Bank typically cuts or raises interest rates on that day. And the reason is because it's really the last chance, in a sense, to make an impact on the economy because, of course, December, we're all in holiday mode then. So, yeah, boring, yawn. Who cares what happens with interest rates? Well, we do care, but it doesn't have that. Yeah, that's right. But well, we see this year why we should care. But for goodness sake, what a market, and given those cuts to rates, have really got that snowball thundering down the mountain. So this is why the November meeting, the Melbourne Cup meeting, is one where the Reserve Bank typically meets because it's the last sort of real chance to make an impact on the economy before the shutdown over the Christmas period. So lots of things happening. I think it's Black Friday this coming Friday. Is it this Friday's Black Friday?
I think so. Halloween coming up, yeah.
Yeah, Halloween, whatever that is. So it's all it's a very busy time at the moment. Before you know it, we'll all be wishing each other Merry Christmas. But God forbid, heaven forbid, there goes the year. But it has been a big day today in terms of the data because we've had the latest inflation data. And it's the last data that we have, obviously, before the meeting next week for the Reserve Bank. And it has been very interesting lately, that inflation data. It will also be the last quarterly data set that we have. The ABS is now going to mainline its monthly data set for the CPI, for inflation. Coming in line with most other advanced economies. So the RBA, which does rely on that quarterly data set, will now be looking at the monthly data set going forward. So we'll have a look at both sets that were released today, one for the September quarter and the other for the month of September. So I've done a really big intro here. Again, we're dragging out the time. No, that's okay. We've got to set the scene for what is going to be a really interesting day. So let's get going. In terms of what's happening in the market over the past week. We bring this to you every week, Rachel and I, in conjunction with the good folks at Infinity. My housing market is the banner under which I operate as an independent commentator and data provider on the housing market specifically. But of course, the housing market is driven by what's happening in the broader economy. So we look at the other drivers, not just prices and rents, of housing market activity, particularly in relation to the economy. And that's what we're going to be doing today. And of course, as we say every week, Rachel, this is a no clickbait free zone, or a clickbait free zone. I think I had two negatives there. And we just rely on bringing evidence-based insights into the housing market to assist with those that are making important decisions in relation to property. So it is the week ending Wednesday, October the 29th. We do have the big race coming up in Melbourne next week, Black Friday, Halloween, you name it, it's a busy time. But it's certainly been a busy time in the housing market this year, and particularly through spring. And we're right in the middle now of the spring selling season. And just on that, Rachel, we're now actually entering the second or the last part of the spring selling season.
Yeah.
The October period is the mid part of the market, and that's usually the really meaty part of activity, because it obviously starts winding down through November into December for various reasons. But so we are now moving into the third phase of the spring selling season. So we'll look at those latest weekly auction results now that we've come to an end to the midsection. But today, as we've already discussed, we're going to look at the September inflation data, both the monthly and quarterly inflation data. This will be looked at very carefully by the Reserve Bank before it makes its decision next Tuesday. We're also, as you mentioned, Rachel, going to look at the latest land prices. This just sort of reinforces the tough gig that we have in terms of matching supply and demand in our housing markets. If you haven't got the land there, or if it's very expensive, Rachel, that's just another roadblock in terms of matching supply and demand. And land prices continue to rise, and the size of blocks of land for home building is also continuing to fall, Rachel, which is another sign of how constrained it is just to to get those building blocks into the marketplace to provide more dwellings for our populace. And of course, we've got tens of thousands of first home buyers that have flooded into the market this month, courtesy of the federal government's first home buyer policy, new first home buyer policy. And just before we'll look also at the latest weekly auction results. So next week, Rachel, it's going to be very exciting, because not only will we be looking at the latest Reserve Bank decision, and I don't think there might be much action there, but we'll talk about that later. But we'll also look at the latest house and unit prices for October, hot off the press next week, Rachel. And let me give you a heads up, there's some pretty hot stuff coming out of that. As I mentioned, the mid part of the market, October, is typically the most significant part of the spring selling season. And given low interest rates, plenty of drive, fear of missing out starting to come into the market, all those first home buyers, we're going to see some pretty interesting price results, just as a preview for next week's show. So look forward to that one. So let's start. So the bad news, in a sense, is that the inflation is now rising, Rachel. Quarterly inflation is rising. No surprise, we've seen monthly inflation rise over the past 2 months. So we knew that was going to be most likely a higher number. Inflation is now outside the target. The Reserve Bank's target for inflation is the midpoint of 2 to 3% annual inflation, and they measure that on the quarterly data set, and they look at the trimmed mean, which is underlying inflation, as their preferred measure. So the data today that came out for the September quarter now shows that inflation is outside the target. It's still within the target range of 2 to 3%, but it's not at the target. And the Reserve Bank has consistently said all year, well, for the last couple of years, that it wants to see a consistent midpoint inflation rate outcome for it to be cutting rates. Now, maybe it was a little bit premature, because we're now moving outside the target. So it really hasn't been that consistent. But nonetheless, we're not going to complain about lower interest rates, particularly if you're a homeowner, because it's certainly driven house prices higher. So inflation is now outside the target range, the September quarter inflation. So we've just clarified this. This is the quarterly data we're going to look at first, and that's what the Reserve Bank typically focuses on, or does focus on. But this will be the last time. It'll be looking at monthly data sets from now on. So the annual September quarter headline inflation, this is the headline inflation rate, so it's not the underlying inflation rate, was up to 3.2%, Rachel, from 2.1% over the June quarter. We knew there was going to be a big rise, because we've been tracking that over the monthly results the last 2 months. So now up to 3.2%, which of course is outside that target range of 2 to 3%, but it's the underlying rate that's important. So underlying annual inflation rose from 2.7% to 3%. So it's right on the outside of that 2 to 3%. So it's not in the midpoint. So, as far as lower interest rates are concerned, the Reserve Bank can't point to inflation being at its target for lower interest rates. Goods inflation was up from 1.3% to 3% over the year. Inflation is typically divided into goods and services. Goods inflation up to 3%, and that was due to higher electricity costs, which we'll look at in a sec, Rachel. Services inflation was also up from 3.3% to 3.5%, so not good news there. But we can still see that underlying inflation has remained consistently within the RBA target range of 2 to 3%, but it is now not in the midpoint, which is what it said it wanted to see consistently in the midpoint. So maybe we've had a few interest rate cuts that might not have come along if this data was being presented a couple of months ago or a couple of quarters ago. But nonetheless, as I said, it's been welcome news for those that are looking to improve the bottom line in their personal finances. And of course, the housing markets have, as usual, responded strongly, our undersupplied housing markets, to the improved affordability, because that when you have a lower interest rate with a given income, it means you can borrow more with a lower interest rate. So that's how it improves affordability. So when we look at the chart there, you can see, it's been going down quite nicely. The underlying inflation rate, Rachel, met the target, but until now, as you can see there, starting to head in the wrong direction. I would suggest, given this data, that we will have a steady result. I don't think we're going to see higher interest rates. I think we're away from even talking about higher interest rates. We're still within the target range. We're not where we want to be in terms of the midpoint consistently. So I don't think there's any real danger of higher interest rates, but I do think it's put a interest rate cut off the cards for now, for this year. So, but you never know with this Reserve Bank. It's been quite dovish in terms of interest rate policy, having had 3 cuts this year and now having to confront higher inflation. And of course, that the inflation rate is higher because of electricity prices surging. And really, the Reserve Bank have said, "Oh, hey, we didn't predict this." Well, you should have predicted it, because if we know that the cut we had in electricity prices was because of the handouts that the federal government gave us 18 months ago. They said that was going to be a fixed period. It did push inflation down, those lower electricity prices. That was the aim. But of course, that finished. And even though we're still getting a subsidy out of the government, it's half the subsidy that it was for the last financial year. And it ends at the end of this year, Rachel. That's why we're seeing higher electricity prices, because we're not being subsidised by the government, or our electricity bills aren't being subsidised by the government. But we should have known that, Rachel. The Reserve Bank should have, rather than say, "Oh, we're really surprised at higher electricity prices," say, "Well, you knew the subsidy was going to end, and that would have had an impact in the other direction on inflation than the impact when we did have the subsidy, which pushed inflation down." So let's have a look at monthly inflation. So that's a bit of a non-event, but it does, I guess, show us the most recent trend in terms of of what's driving the inflation rate higher. And this will be what we look at from now on, will be the monthly inflation rate, no more quarterly inflation rate. So the headline inflation rate over the month was actually up to 3.5%. From August, 3%. So if anything, inflation is accelerating on the monthly basis. So it's month by month we've seen this. It's actually accelerating. Underlying inflation was up to 2.8% over the month, still within that target range for the Reserve Bank and similar to the quarterly data set, but up from 2.6%. Now, the big move, Rachel, and this is hang on to your hat, was an annual rise over September that's September last year to September this year, electricity prices have increased by 33.9% over the year. That's a massive increase.
That's
and
huge.
Even it is huge, and that's why we're seeing, higher electricity prices, higher inflation, and that's up from what was a big result over August, which was 24.6%. So that's the background to it. Fuel prices were also higher. We've been seeing lower fuel prices over the year until now. In September, actually, we saw a rise in fuel prices of 2.8% over the year, which followed an actual fall of 1.7%. So we're going from a period where we've had a positive impact on lower inflation from lower fuel prices over the year to where fuel prices are now tracking higher than where they were a year ago. But we'll look at fuel prices a bit more closely in a minute, and there's some better news there. Rents were also higher. They've been going backwards for a while, but there was rents ticked up to a 3.8% rise over September compared to 3.7% over August. So underlying inflation is still within the target range, but we've now got really a head of steam running in terms of electricity prices, and you've got to understand that it's still being affected by the subsidy, Rachel. But that subsidy, which is a reduced subsidy, it runs out at the end of this year. So obviously, when we get into next year, that's still going to have an impact on inflation. And there's the data. Electricity up. You can see the big. Everything is up. Electricity is higher compared to August. Fuel is higher compared to August. Rents are higher, and the total is higher at 3.5%. So there's the chart for the monthly data, and you can see how the monthly data has really been signalling that turnaround in inflation from falling to starting to look like, starting to rise again going forward. So as I said, I think this will mean that the Reserve Bank will sit on its hands for its meet in terms of official interest rates will be on hold. But I don't think there's any chance because we're still within the target range for inflation of an interest rate increase. They'll have to worry about that next year, perhaps. We can see there oil prices sort of have tracked, have stabilised over recent months, and as inflation has stabilised as well, because oil, the big picture there is oil is an important factor in inflation, particularly given how we had very high oil prices through the COVID period. And as it's come down, so has inflation come down. But when we look at the $60 a barrel there, oil price is the October data to date, Rachel, and of course October's just about finished. So some good news there is that the oil price is actually lower over October compared to what it was over September. So that'll have a positive effect on our inflation rate when we get that October rate. Now, of course, there are other factors that will influence the inflation rate. So, but at least we're seeing some better news in terms of oil. But you can see the annual growth, even though the monthly rate of oil is positive, when we compare it to where it was a year ago, well, we can see that it's a positive outcome, 17% lower than where it was a year ago, the October oil price. So that will have a positive effect on lowering the inflation. It's just a question of what electricity does. And you can just see there, Rachel, how the oil price has started to ease recently, and as I said, that will have a positive effect on inflation. So I've already spoken about electricity. This is just a bit of a jumbled chart regarding electricity. You can see the gold chart there is the electricity prices. You can see how they've skyrocketed over the past 3 quarters, and you can see how inflation is tracking that, and now inflation is running ahead. The dotted line is the target, midpoint of the target, and we're now starting to track above the midpoint of the target of the inflation target range, and that's because of those higher electricity prices. So, hey, will the government give us some more handouts? Well, who knows? But I think that's the only thing that's going to save us from higher electricity prices and also higher inflation. But there are other factors, as I said, such as a better outlook for oil, which could balance that out going forward. So we hope that is the case. So that's inflation, big story because of what its impact is on interest rates, Rachel. As I said, I think it's telling us that there'll be an on-hold decision next week from the Reserve Bank, but we'll be interesting to see just how they relate this latest data. As I mentioned, this is the latest land.
You're already putting your bets on for a rate cut hold.
Yes. I don't think there's anything there. I mean, the Reserve Bank would also know that there's likely to be more electricity increases, right?
Yeah. Well, it's huge at 33.9% already. I mean, it kind of brings me to my question. You kind of said it before. Are we going to get more subsidies? Can the RBA really look through this, or do they have to act?
Well, I don't think they'll increase because there's nothing they can do because the RBA raises interest rates to quell demand, so that will push inflation down because that's prices, so people don't spend as much because they've got to pay more for interest rates. But there's nothing interest rates are going to do. You can't sort of like, I'm not going to use as much electricity, blah, blah, blah. No, it's the bounce back effect from the subsidies. The federal government introduced those subsidies because it knew it would have a downward effect, and of course to help households, but it also knew it would have an impact on the inflation rate. It wanted lower interest rates, particularly, with an election coming up. But of course, the other end of that pineapple is the spiky end, which is, okay, when the subsidy ends, up go electricity prices again. Now, electricity prices are actually rising globally at the moment, particularly in the US, Rachel. And part of that is because we're still in this transition phase between renewables and the carbon economy and carbon-based energy generation. And that's becoming, it's still an expensive transition period. So the underlying cost of electricity is rising irrespective of what's happening with the subsidy environment. Now, it's been good that we've had some relief from high electricity prices, but now that relief's sort of gone, and we're back to the reality of having to pay high electricity prices. But I don't think this means higher interest rates because, it's not something the Reserve Bank really can sort of use to moderate with interest rates, moderate the use of electricity. Now, the other point to all of this, which we haven't mentioned, I'll just quickly mention it, and that's the labour market, which has actually just been a little bit sideways recently. Not calling anything here yet, but it's showing some early signs of maybe peaking out, which had to happen. But I don't think there's enough negativity around what's happened recently in the labour market for the Reserve Bank to say, hey, we need to cut rates because the labour market's looking a little weak, because then they've got this other end, which is higher inflation. So I think on balance that we will remain on hold with our interest rates next week. But hey, we wait and see that result on Melbourne Cup Day. Latest land prices, similar to what we show every month, Brisbane front and centre in terms of increases in building. These are house building blocks in the capital cities. 19.1% increase in Brisbane house building blocks. It's now over $1,000 a square metre to buy a building block in Brisbane. Just 66 sales. We've already seen the building approvals for houses in Brisbane falling away. And that is a boom market. We'll have some big results next week with Brisbane house and unit prices. It's a booming market at the moment, but there's no sign of relief in terms of offering more properties in the marketplace. I mean, organically, new properties. And new properties always start, well, certainly houses with a block of land, Rachel. And that median sale price for a block of land in Brisbane is now $530,000 for a block of land. And as I said, just 66 sales over September and a big rise, 19.1%. All the capitals, and that's over the year, all the capitals have reported a higher prices for building blocks over the year. And Sydney is the most expensive there, as you would expect, is the most expensive for houses and units that are completed. But Sydney now has a a median price for the average building block of $725,000. So expensive stuff there. In Brisbane, it's interesting that Brisbane's land prices are also higher than Melbourne's land prices. And of course, we know now that Brisbane house prices are higher than Melbourne house prices. So no relief in sight there, Rachel, in terms of our undersupplied housing market. So let's have a look at the latest weekly auction results. We had a lot of auctions coming into the market as a avoidance of this holiday weekend coming up, certainly in Melbourne, but also a distracted weekend in the other capitals. But with the exception of Melbourne, the auction market's held firm. So plenty of buyers out there still, Rachel. So it doesn't matter how many auctions it seems to come in to the marketplace on a weekly basis, going under the hammer. There's still buyers that are securing them. Sydney, 1,231 auctions over the past week, up a little bit lower than the week before, but a very similar clearance rate. And Sydney's clearance rate is tracking 10% higher than where it was a year ago. Says it all. Melbourne had a massive week, Rachel, for auctions, 1,762 auctions in Melbourne. That was the biggest number of auctions conducted in any capital city over a week this year. A little bit lower than the same week last year, but very similar, 1,782 versus 1,762. But the biggest week of auctions of all the capitals in Melbourne last week. Clearance rates, not surprising, down a little bit, still around about 70% clearance rate and well ahead of where it was a year ago. But there's lots more on offer with these big numbers. So there's more competition amongst sellers because there's more properties being offered and there's more choices for buyers. So that's typically why we see some downward pressure. But just an interesting insight into those Melbourne results. It was again the higher priced end of the market, Rachel. That was the weaker part of the results. So still no real sign of a consistent revival in higher priced property in Melbourne. It's all about mid-price and lower priced properties in Melbourne. Plenty of demand for that, but it's the top end of the market, the inner suburbs, that are still just not picking up that great Melbourne revival vibe that's been there for most of the year. Brisbane, similar auction numbers, but a higher clearance rate in Brisbane. Adelaide had a surge in auctions, 187 auctions in Adelaide, and a similar clearance rate. And Canberra, just a little weaker than where it's been recently, and similar auction numbers there. So we're not going to see a lot of auctions this week, certainly not these sort of numbers, particularly in Melbourne and Adelaide, Rachel. It won't be a full market, but then we'll start picking up, as I said, into the final section of the spring selling season. There are our clearance rates, just a little easier over October versus September in most of the markets, but you see the big revival that occurred through the year in all our capital city markets. But as I said, just looking a little weaker into October versus September, but still very much results in favour of sellers. So still plenty of competition there for property and higher prices, as we will reveal next week. Brisbane down a little bit over the month. Over the month with a 50% clearance rate. Adelaide also down a little bit, and same with Canberra. So this is because there's more properties coming into the market, Rachel. So that's why we're seeing, even though it's still very solid to strong clearance rates, they're not as high as they were in September because there are more choices out there for buyers. If you're looking for the latest auction clearance rates, every Saturday night on my LinkedIn channel, Doc Andrew Wilson at LinkedIn, around about 6 o'clock you get the city snapshot, and then Sundays at around about 9 o'clock you get the full national report, which includes the regional breakdowns for Sydney and Melbourne and the top 10 sales over the week under the hammer for each of the capital cities, which is always interesting to look at. If you've missed the latest auction market report, there it is. You can scan it on your phone and it will give you a PDF copy of the latest auction market, national auction market report. And as usual, as we finish off, Rachel, here's the greatest handout in property, the My Housing Market Infinity Suburb Data app, which gives you all, we speak about capital city markets and regional markets, but we do want to find out know what's happening in suburban markets, and you can get all that insights, real-time insights in terms of asking prices and asking rents for every suburb in Australia that has data. So you can scan that QR code to give you a link to the app, or you can click on the link there. It is password protected, and the good folks at Infinity will advise you how you can secure that great app. And here's a screenshot, Rachel, of the app. So you can put it on your phone, put it on your desktop, and it will tell you what's happening in every suburb in Australia that has data in real time. And these are asking prices, so it tells you what vendors and agents think the market will hold at the moment for both prices and rents. So you can filter for prices or rents. You can filter it for the capital city region or the outside capital city region. We're looking here at the capital city region of Sydney and the suburb of Blacktown we've selected. You can filter for house unit or townhouse, and you can also filter it for the number of beds. How good is that? And not just the median asking price here, also the low and the high. So you know the range of what properties, what the market is offering at the moment or asking at the moment for every suburb, and also tells you the number of suburbs or the number, of properties for sale as well. So a great little decision-making tool for those in the property market or those just want to know what's happening. They do the same thing for rents there. We can see those for Blacktown, that median, low and high rent, and 13 four-bedroom houses currently for rent. And also we have some insights here for return on investment, particularly interesting for investors, which looks at the gross yield. That's the gross return calculated by the annualised current asking rent divided into the current asking price. That gives you the yields. So these are ranked from 1 to 10. So you can see which suburbs are offering the highest yields. Also, the vacancy rates are there for each of the suburbs that are listed, as well as the number of properties for rent or for sale. And if you don't know where these suburbs are, you can click on the hot link there, and it will take you to a map of those suburbs. So isn't that fantastic? And hot off the press, Rachel, we're going to have not a brand new app for next year, but we're going to have some really great stuff in the app, and that's going to be latest property news as part of the app. So we're going to look at some of the stuff we discuss in our Wilson Weekly and the Infinity blog. We're going to have that as part of the app, so you'll be able to catch up on all the latest news in property. How's that? Are you excited? I'm excited.
That is awesome, Doc.
Yes. So watch out, everybody. All the latest news from Infinity and My Housing Market on property, as well as all the data as well. So next week, we're going to look at, of course, October home prices. We've already discussed that, and the latest RBA rate decision, and as usual, the latest weekly auction results. So I'll see you next week, Rachel. Don't spend too much on Black Friday. You know, you've got to control yourself. I'm saying that all around here at the moment. Let me tell you, Black Friday, forget it. If you missed the report, there is a QR code, and you can scan that, and that'll give you a PDF copy of today's extravaganza. So we'll catch up again next Wednesday. Don't spend too much on Black Friday, and don't spend too much on the Cup if you bet on the Melbourne Cup. And good luck. I hope you back a winner. So, but the real winner this year has been property, has it not, Rachel?
I was going to say that is our real winner. So we've got some really awesome data coming next week. Your bet is interest rate hold. I think I've got to agree with you there, Doc. Now, you did mention that some of that data that we have delivered today is going to come to us monthly now. How do you think that's going to impact what we deliver?
Well, that's the inflation data. I think it makes it a bit easier for the Reserve Bank in a way, but it also means that they're hostage to a month-by-month change.
Yeah.
You know, so before it was like, okay, we wait for the quarterly data. So that meant that they were making decisions when the quarterly data came out. So it was every 3 months. So it means there's some pressure on them to make a monthly decision in terms of interest rates, rather than, because they've always waited for the 3 months. And if you look at it, we've had February, we had May, and we had August, 3 monthly in between, and they acted as soon as they had the most recent quarterly inflation data. So now they're going to have the monthly data to sort of work on, and that's been pretty volatile, particularly as we've seen with electricity. Yeah. So that makes it interesting, but it's more for us to speak about, of course, because it gives us a much more real-time insight into where interest rates are likely to head. But it's very interesting what they can do. There's not much they can do about electricity. And, you know, there's certainly still a sense out there, even with lower interest rates, that, you know, standard of living, cost of living is still pretty tough. You know, even though inflation's been falling for the best part of a year, it's still prices are still a lot higher than where they were before they took off 3 years ago. You know, so we're not seeing lower prices. Prices are higher. They're just not as, you know, rising at the same rate they used to. I paid $6 for a cup of coffee the other day.
That's nuts.
$6. Yeah.
That's crazy.
And it wasn't great. Let me tell you, it wasn't great. Anyway, $6 for a regular, you know. In fact, it was $6.20 because there was a weekend, you know, surcharge. Give me a break. Anyway, but that's my point. You know, prices aren't going backwards. They're still rising, but there's been no discount, even though. But we've had our interest rate cut, so that's the dividend we've had from.
Thank you for that. I think that's good for our listeners to know how that will impact them. So that is a wrap on another week of Property Truths. Dr. Andrew Wilson, where the data never lies, and a reminder that sometimes the headlines do. If you're trying to make sense of this ever-changing market, you're in the right place with the Wilson Weekly on the Money Mentor podcast. We are always here to turn all that noise into knowledge. Until next week, please stay curious, confident, and remember, data beats drama every single time. Doc, I'll see you on the masterclass this weekend.
That's music to my ears, Rachel. Yes, masterclass. I'm looking forward to that. Gee whiz, we had a huge return on that.
Big one last week. And it's the last one for the year, Doc. So this is very exciting. Okay. It'll be the last one before anyone can get in to be a client for about 3 months.
Oh, wow. There'll be a queue a mile long, I bet you.